You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, share some thoughts, go over the market, and once in a while we'll even share our trade of the day. We are live. We're live at mastersintrading.com/live. We're live on YouTube. On YouTube, I have the chat up. Thank you for joining, Saul, Dale, Wade, and everybody in the Discord room. Thank you for joining on our live program. Today we're going to talk about the NASDAQ, the S&P, and bonds. We're also going to be talking about short-term options, and we're seeing a disconnect between the NASDAQ and the S&P 500 right now. So without further ado, let's head over to the screen. Okie dokie. So over the next week, guys, I'm going to be discussing how to trade short-term options. And I'm going to discuss how to trade short-term options with VIX term structure. For those who listen to Masters in Trading Live, for those who've been following me for a while, you know that we don't follow the fear index, the VIX, because that's 30 days. We follow VIX term structure because we want faster feedback from those volatility measures. So that's what we're going to be talking about this week. And then starting tomorrow, registration will open for a brand new live strategy session that we're holding next Tuesday. Let me find my pen here and let's get down to business. Okie dokie. What are you looking at? We are looking at 3 different lines, okay? This is 1 month, boom. And this is a month. So these are, pardon me, these are years. These are full years. So 2024, 2023, 2022, and so forth. The yellow line is going to be the NASDAQ versus the S&P. Okay, right here. The blue line is going to be NASDAQ versus the Dow. That's here. And the green line is going to be the NASDAQ versus the Russell. Okay? Make sense so far? So let's go into 2024 and let's look at what's happening right now. Right now, the yellow line is weak relative to the green and blue. Okay? If we're just looking at these 3 correlated lines. Now, these lines are just the NASDAQ against the different indices. So green and blue, let's start with the yellow, okay? I color-coded these. Yellow. In order to capitalize on the yellow coming back, you would buy the NASDAQ and sell the S&P, okay? Now, this blue line, if you think it's going to come lower, you would sell the NASDAQ and you would buy the Dow. This green line, if you think it's going to go lower, you sell the NASDAQ and you buy Russell. So what do we know just from looking at this? Well, the NASDAQ is going to cancel each other out. Okay? Because one is you want to buy the NASDAQ, the other one's you want to sell the NASDAQ. They're going to even one another out. In my opinion, the most important thing to do with short-term options is you have to sell what's expensive and you have to buy what's inexpensive. So right now, NASDAQ is cheap to the S&P. It just is. And then if I go to this chart, which is the very next page, which is just 2024, and this is just NASDAQ against the S&P. If you wanted to buy this and you thought this was going to go higher, you would buy NAS, and sell yes. And that's what we would think. This is the one that is cheap relative to the others. So if you're looking for something to buy, if you're bullish, you want to be long the NASDAQ. If you're bearish, don't sell NASDAQ. Bears, sell S&P. Bulls, buy the NASDAQ. That's going to be the most important thing, is making sure that you're in the right contract. This next page is going to get my members very excited, especially my all access members, because everything that comes out will be included with all access next Tuesday. Here we go. So what do we have here? Well, let me set up my screen a little bit, because there's something important I wanted to have up here, which I didn't. So give me a sec. Give me 1 second. Because what we're going to do now is we're going to look at VIX term structure. When we look at VIX term structure, we are looking at the difference between the different VIX indices. Okay, I'm going to take off those bid and ask, because that will bother me to no end. Boom. I like that percent change on there, just to keep it nice and simple. And there we go. So here we have VIX term structure. Now, if we look at the VIX 9-day, it's trading 14.71. Okay? 14.71. Now let's look at this, because this is going to blow your mind, and this is what we'll be talking about next Tuesday. This morning, the VIX 9D was trading 1585. The VIX was trading 1627. The 3-month VIX was trading 1767. And the 6-month was trading 1917. Okay? These are from 11/6, but these are also pretty much what's going on right now. Now, the other times during this year that the VIX term structure looked the same, we have 4 different results where VIX term structure is really looking the same. It's all trading the same. The VIX is pretty much all trading the same. The 3-month and the 6-month, all trading the same. We have 4 different results. But if I go one more page, this shows all the results that have happened when we've had a VIX term structure look like it is today. But what do we know? VIX 9D, it opened at 15.5. The VIX 9D is even lower than it was at the opening, 1470. So this morning, as I just spilled a whole thing of water, but that's okay. I spilled it on another computer, so that computer will have to be wet. So what we have here, this morning, VIX 9D was like 1550. Well, now it's like 14.7. It's even lower. So all these circumstances pretty much match the exact structure of the VIX term structure right now. What does that mean? Well, 1-day performance, 5-day performance, 10-day, 21-day, 42 days. So when we see this kind of setup in VIX term structure, overall, the results that we end up seeing is right here. 1 day or 10 days, we see a 0.5% return. 21 day, we see a 1% return. And then over 42, we see a 2% return. But you can see there's only 3 instances out of 50 when we have a VIX term structure that looks exactly like it does right now. There's only 3 circumstances over the next 42 days that the market ended up trading lower. This is what we're going to be talking about throughout the week. And this is what we have a live strategy session for Tuesday of next week. So make sure you join tomorrow to make sure that you're registered. This is going to be really, really powerful and super excited. Also, I just talked about VIX term structure, right? Bullish, bearish. That's why we talked about the SPY and the NASDAQ in the couple of screenshots before, a couple of slides before. Because you use VIX term structure to see if you're bullish or bearish, but then you want to analyze the S&P against the NASDAQ, against the Dow, against the Russell. Because if you're bullish, you want to buy what's inexpensive. And if you're bearish, you only want to buy what's expensive. Awesome? Cool? We'll be talking about this for the rest of the week. Expect your attendance tomorrow. But now we're going to talk about bonds. Barry, U.S. bonds. One of my favorite baseball players before he ingested all those steroids. But I used to love Barry Bonds. The killer bees. Okay, what do we have here? I hope you could see this, but you notice this little baby disconnect right there? Can you guys see that? Little disconnect right there. Why? Short-term rates are rallying. Long-term rates are not yet rallying. Long-term rates need to rally. ZB is cheap. TLT is cheap. There is a little disconnect. These move together. When there's a disconnect, there's an opportunity. That's opportunity right now. And right now, TLT or ZB for bond futures, those are inexpensive. Why do I have these two charts? I wanted to show it on a monthly. That's what I'm doing here. And then I think I blew it up. So I just tried to give you a better view of this disconnect right now. But notice they move together, right? Here's a good example. Look back here, guys. Look back on these blue lines here when the blue line was getting disconnected from the others. It's a faster moving contract. Because the blue has 20 years of duration, it's more volatile than the shorter term contracts. So that's why that specifically gets out of whack sometimes. Finally, I think we have a couple more charts on the TLT. TLT, weekly, just staying on the edges. When do we get these sell signals? A couple of early buy signals here, stays on the edges. Boom, boom, boom. And then right back down here, rather be long than short. And then if we go on the daily for again, the TLT, 3, and then 5. Screaming buys in those TLTs. So we have a huge week of training. Please, everybody, join us tomorrow. We are going to open up for our live registration next Tuesday. We're going to talk about VIX term structure, and we're going to continue playing with that awesome new tool that's going to help us get in front of these powerful short-term moves. I'll see everybody live tomorrow, 11 a.m. Eastern, for everybody in All Access. You guys, don't go anywhere. We'll be right back.